Welcome to the WTR Small Cap Spotlight Podcast. I'm your host, Tim Gerdeman, Vice Chair and Co-founder and Chief Marketing Officer of Water Tower Research. In today's podcast episode, I'm being joined by Hylton Karon, President and CEO of iFabric, Toronto Stock Exchange ticker symbol IFA, and OTC ticker symbol IFABF. Originally founded as an intimate apparel company, iFabric today offers textile products and technologies that cover a wide range of consumer markets such as athleisure, lifestyle, swimwear, healthcare, hospitality, and military applications. Also joining us today is my colleague Doug Lane, Head of Consumer Products Equity Research at Water Tower Research. Good morning, folks, and thank you for joining today's podcast.
Thank you for having me join you, Tim. Appreciate it.
So to kick things off, Hylton, iFabric may not be a familiar name to many of our podcast listeners. That having been said, could you please kick things off by formally introducing our audience to your professional background and iFabric's business model, please?
Sure. Now, I am third generation in the textile business, and I did my formal education at Jefferson University in Philadelphia at their School of Textiles. I graduated from Philadelphia and I moved to the textile part of the US business, being New York City, worked there for many years, and then immigrated to Toronto, Canada. And I have been operating either as a private company. This company's roots go back to the early 1990s, as you say, as a lingerie accessory business. And in the early 2000s, with my textile background, we became aware of these technologies to make apparel more than just the aesthetic. And so we started this second division called Intelligent Fabric Technologies around 2007. And I owned the entire organization myself 100% until we went public in June of 2012. Prior to going public and prior to really launching that division, we've spent multiple seven figures a year doing research on our technologies before commercialization. So a lot of what we do, and I'm really proud of our organization in that we are not one of these technology companies that have designed specific tests to put our best foot forward from a marketing perspective of what we offer the marketplace. We solely and only invite all our commercial partners to use third-party laboratories. So it is never a case of what we are promoting. It's a matter of based on efficacy and actual science that is done by completely independent laboratories on a global basis. And it is really that strategy that has helped us garner the kind of commercial partners on a global basis that we really are very proud to have as part of our commercial partners today. And we really are proud of what we've developed and how relevant we've remained in many, many markets, with the outlook in the future of how many additional markets we'll be able to go after in the future. I think your introduction really did go over who we are dealing with today. But I just think the listeners should understand that while our corporate head name is Intelligent Fabric Technologies, we soon are going to be dropping the fabric and just going to be Intelligent Technologies, because while our expertise, and we've built quite an impressive growth curve with fabrics and what we call soft surfaces, we've been encouraged to now go after hard surfaces. So please look out for, in the future, we will be dealing with, whether it's a door handle, whether it's a bed rail in a hospital, whether it's paint on the walls. We're actually going to, our corporate motto in the future is going to be, if you can touch it, we can treat it. So we really have great expansion into the future in terms of where this company is going down the road.
That's a fascinating strategic pivot. So thank you for that. And I'll now turn the call over to Doug Lane to ask a few questions.
Yeah, thanks, Tim. And good morning, Hylton. I'd love to hear more about the intelligent fabric business and what kind of technology and innovation are we talking about? I read about multiple patents and trade secrets. And so where have you really been spending your time and energy on the fabric side?
Doug, thank you. I think that what was key to us, as I say, in the early years was finding out about these technologies. And I think that the single standout market that really caught our attention is how do we get into the supply chain in the medical market? That was something that was really new and exciting and innovative from our perspective. And so we spent multiple years, and in fact, about 6, 7 years ago, my team and I went down to Washington, D.C., and we sat in the EPA's office and we asked them to certify our fabric against specific pathogens. And in short strokes, they said, we don't even have a protocol to deal with such a thing. It's outside of our expertise. And they invited us to work with our epidemiologists and our team. And believe it or not only did we write, but it's now been adopted by the EPA as a protocol in their library in order to certify fabrics for medical claims against specific bacteria and specific pathogens. So we really pride ourselves in having been able to achieve that with their cooperation. And so our real standout technology that with that in mind is a technology. It's actually a suite of recipes that all fall under this umbrella. Is a brand of ours called Protex 2. And we believe that in years to come, that while today there is no company in the world that is allowed to have an EPA, they call a kill claim against specific pathogens, that is the holy grail of what we're working towards. And we've had significant steps forward in that regard, in that exercise, and they've already granted us certain registrations. The only aspect that we've got to clean up and finish for them is a leaching study so that we can apply that kind of a claim to a worn apparel against the skin. So that is the last step that we have to believe for us to be the world's first apparel with a EPA certified and registered kill claim against specific pathogens. And we are very proud, and we're working really hard. We've worked on it for many, many years. And it's a real feather in our cap that we've been able to come as far as we've come. We actually have retailers and we've got brands already operating with the technology, having seen the science. And this Protex 2 technology finished a very successful clinical trial in California last year. So we've got that empirical data, and we now have that out to a medical journal for them to do what's called a peer review and to publish a white paper of the efficacy of adding our technology to whether it's scrubs and lab coats and apparel, and dare I say, even the linens and ward separation curtains in the medical market space. So we are very proud, and that I would say is probably the #1 technology that really is going to be a game changer for us in the future or as this company grows. I think that we are not a cornered company whereby we only apply to one industry with one technology, whether it's transportation, whether it's medical, as you say, military, hospital and hospitality. There are so many in the day-to-day environment applications that we apply to. And I think that that just speaks to the dynamic suite of technologies that we offer the marketplace. So we're not pigeonholed to one market space, and which gives us phenomenal growth into the future. So it really is quite a host of technologies that we will be speaking about and launching in the future.
No, it sounds very interesting and exciting to think about hard surfaces as well, which you're just getting into. So it sounds
Yes.
like a very large opportunity. But you're not just medical and you're not just military. I mean, you sell to some of the big retailers out there. Talk a little bit about your retail apparel business.
Well, we've just enjoyed, I think that one of our key strengths is we've never got into the fashion business. So we've really understood that it is basics. It really the basic 12 month of the year kind of apparel that we wanted to get into. So it's a more recession-proof business model. It's been successful for us. We've also dealt with the mass merchant. So we really have strategize in that there really isn't a major lift in cost to take a basic pair of underpants, men's underwear, ladies' underwear, and adding a few cents worth of technology. So we're really not changing the retail price, but we are changing the whole concept of what it is that you're wearing with the added protection that we're bringing to the consumer. So we've really gone after, and it's public, so we've gone after the Walmart and the Target and the Costco's of the world, to name a few. We really are in really broadband retail with really impressive footprint in the marketplace. And they're encouraging us what else we can do for them, which is a great growth strategy for us as we grow. So our inventory remains current and stable from a financial standpoint. We're not in seasonal. The only area of business, and it has been quite impressive for us, so that I'll say has got any seasonality to it, is we've now started for the last 2-3 years, and it's in double-digit millions, is swimwear. So we really do have, once again, with technology, and it's been a phenomenal. We really are finding key areas and market segments that we can be pertinent to with technology. So it's basically a bathing suit that you come out of the water and your garment's already dry. So there's always an additional feature that we've added to the garment that separates it from the run-of-the-mill.
No, I look forward to that. Nobody likes a wet bathing suit. But I think what I like about the story is that you're not just talking about stuff that's on the come. I mean, you're doing it. I mean, you just reported a very strong quarter, sales growth up 55% in a consumer environment that is shaky at best. EBITDA margins at 17%, which is impressive. Talk a little bit about the December quarter that you just reported, and are these kind of results sustainable?
Yeah, the answer is, in the long term, absolutely. I think that we just came off close to a $30 million year, where 5 years ago we were pushing 10 million. So in 5 years to go to triple the company, I can and to have COVID, which really had us sitting on the couch for 18 months of that 5-year period, really shows the kind of trajectory this company is on. It's not going to take another 5 years for us to double where we are today, to double the company from where we are today. I think that it is important for the shareholders looking at our quarter-by-quarter graphs. It is always Q4. We just changed our financial year end last year, so that from this is our first year where Jan 1 to December 31st is now our financial year. It's a lot easier talking to the investor community, Q1, Q2 being the calendar year. Traditionally, and always going forward, Q4 will always be that really impressive growth quarter. That's where these programs that run a 12-year cycle are what we call the set mods. So October through December will always be that big lift quarter for the year as we launch new products and new category segments. I think this year, 25, is going to be no different. And I'm excited. I think people will have to look out for these new products and market segments that we've never supplied into before in the history of the company. Will be launching in no insignificant way at the end of 25. I know on everybody's mind is tariffs, and that has just been something that's on everyone's mind. We've done a phenomenal job while China has been our major supply country. We've got Cambodia, we've got Vietnam. And prior to tariffs, just knowing that there was this nervousness of supply and everything coming, the amount of stuff coming out of China, we'd already taken steps to segue so that we don't have all our eggs in one basket. We really believe that we've got a very strong strategy. There might be some minor impact on the tariffs. I'm hopeful that the next 3 months are going to have us not talking about this particular topic anymore, and it's going to be business as usual. I don't think the retailers can afford it. I don't think the consumers can afford it. And as suppliers in the middle, we're very hopeful that this is going to be a topic that will be put to rest. So it really isn't going to affect our EBITDA and our margin, and we really believe that 25 and 26 are going to continue in the 20 to 30% a year growth on top of record years. So those are going to be even more impressive growth years as we go forward.
And where do you think that growth is going to come from? You mentioned tariffs. You have a big U.S. business, and a lot of the growth, I imagine, is coming from the U.S. But talk a little bit about specifically, are we looking at other distribution expansion? Are we looking at new products? Is the hard surface business going to play a factor in 2025, or?
All the forward-looking statements that I've given you are actually not even taking the hard surface into account. That's how much dynamic growth we've got, organic growth. So
Wow.
that's going to be growth on top. I really, at this point in time, can't even tell you when we're going to launch a particular product into the hard surface. We're just doing the development work as we speak right now. It's definitely not going to impact 25 numbers. I'm not saying that they're going to impact even 26 when I talk about growth on top, but I'm very hopeful that by, within 12 to 18 months, we'll have a far better roadmap and be able to give the investor community a far better idea of when we're going to be entering into those markets. But putting that aside, yes, as I stated, new product segments are going to be what's going to drive the growth in the future. And we're as a business, 25 has already been put to bed. So we're already working on 2026 because it takes that long for us to design, produce, import, and put through the distribution channels. So we're well into 26 already. And the good news is that when we are responsible in putting out our forecasts, it's because we already, those orders have to be in hand, which helps us run our cash flow and our business, because you've got optics a good 4 to 6 months to 8 months out in terms of what what you're going to be delivering.
You mentioned cash flow, and I looked at your financial statements, and it seems like you have a very strong balance sheet. You generally generate positive free cash flow. You do have a lot of growth plans. I don't know what the investment behind the growth is. Can you just talk a little bit about where you think you'll be spending your capital in the next couple of years to support the growth?
On working capital. We really don't need more infrastructure. We don't need a lot of high-end management positions to fill. Our sales team are bringing in sales, as I say, at a rate that we're more than comfortable at growing at. So really, working capital is going to be the biggest use of funds going forward. However, as we sit today, and we just brought out financials, and financials will come out again next week for the next quarter, we're sitting on cash as we speak in the multi-million. And we just doubled. We need a press release. We just doubled our line at the bank from 6 to 12 million, on top of working capital of another 20 odd million. So we really are very, very well financed to double the business without looking at doing any outside raises at this point in time.
So it is self-funding. That's good to hear.
Yeah, absolutely.
Like that.
Yeah. Yeah.
And you mentioned you owned 100% of the business before
No. 100% before we went public. Yes.
But now it's still a large number, right? Can you talk
I'm around 60% ownership, and management owns close to another 10. So we are, as I always tell the investor community, if you want a company who's got management, who've got boot in the game, this is our baby and this is our lives, and we're more than committed to it because it's all we got. So we really are very, very committed to the business, and the ownership percentage obviously shows.
Well, no question about it. You're eating your own cooking, as they say.
Yeah.
Hylton, I really appreciate you joining us. I see we're coming up on time, so I'll turn it back over to Tim for any final comments or questions or whatever he wants to talk about to close off the podcast.
Thanks, Doug.
Thanks, Hylton.
Great. Thanks for joining us today, Hylton Karon, President and CEO of iFabric, TSX ticker symbol IFA, and OTC ticker symbol IFABF. And also thanks to my equity research colleague, Doug Lane, for joining us today. And finally, a special thanks to the producer and editor of the podcast, Joe Brunetto. Thank you for listening. Don't forget to subscribe, as well as visiting www.watertowerresearch.com to stay up to speed on the company's small cap written research reports, podcasts, fireside chats, and conference schedules. We will see you next time for another edition of the WTR Small Cap Spotlight podcast.